Hey guys, Connor from Rock Pokemon back at it with another Market Monday. Today's Market Monday, we're going to talk about understanding your investment returns and why you probably won't get rich off of investing, quote unquote, in Pokemon. Let's do it. So I think what a lot of people have talked about lately is this idea of buy and hold, right? Where you just pick up modern sealed product or other easily accessible products and you say, hey, 3 to 5 years, it has to go up. You're going to do great. What those people won't do is run through the math with you and help you understand what your actual return is on that quote unquote investment. So what I hope to get out of today is one, inform you guys and help you to better track and understand your investments or your collection and what the returns truly are on those investments. And then secondarily, help you make more educated decisions about maybe where you're putting your money and why it might not make as much sense as it seems off the face. So I think what we will start with is a simple example, right? So a lot of people will say, hey, you can buy a booster box at $100 today, and in 3 to 5 years, it'll be, I bet you that thing will be at 150, right? So let's run that out, right? So let's say you buy a box at $100. So your purchase price was $100, okay? So we're starting there, but then of course you probably bought that on eBay. So let's say the taxes in your state are 5%, keep it simple. So that's another $5. And then, you had to pay shipping too. So shipping was another $5. And so your all-in cost to purchase that, let's say box or something of that kind, was $110. This is what we call your cost basis, otherwise known as your entry point. And in investing, your cost basis is everything, because this cost basis is what determines the return on your future sale, right? So let's say, classic example, 5 years go by and oh my goodness, this $100 box is now able to be sold for $150. So you throw it on eBay, you make that $150 sale. Then of course you're going to pay, the eBay fees of what right now is 12.35%. So that's what, $18.50. And let's say it costs you another, in shipping, bubble mailer and tape and printing and whatever, let's say it's another 50 cents. So what you do is you sold it for $150, then you had to pay $18.50 to eBay, then another 50 cents. And that leaves you with $131. So this is your net before tax in your pocket sale price of $131. So you might say, hey, pretty good. I started, bought something for $100, sold it for $150, but that's not truly the case. And as you can see, what we've done is said, okay, I started at 110 all-in cost basis, and now after all my frictional costs, I've sold it for 131. That was a 5-year time horizon. What does that really look like? So first, let's talk about taxes, okay? Taxes. Long-term capital gains rates on collectibles are 28%. So if you're a good boy or girl, you're taking that $21 of profit, right? 131 minus 110 basis gives you 21, right? Let's just make some room here. So that was $21. That $21 is taxed at a 28% long-term capital gain rate, which is about $5.88. So that leaves you in your pocket with profit after tax of $15.12 from that 5-year buy and hold investment strategy. So let's take a look. 2 different scenarios, okay? Pre-tax and post-tax. Post-tax, all right? Pre-tax, all right? You had $131 after fees over your $110 cost basis. That is 1.191, which means 19.1% cumulative return over 5 years. However, you have to raise that to the 1 over 5 because what we want to do is annualize this. What was your average annual yearly return for holding that for 5 years? That brings you to 3.56% per year. Now, post-tax, you had this over here, 21 went down to 1512, so there was 588, so 131 less that 588 takes you to 125, spot 12, over your $110 cost basis, which gives you 1.137 raised to the 1 over 5, which means you had a 2.61% annualized return. Now, these numbers are before you factor in inflation. Let's say on average inflation runs, this is the little symbol for inflation, it's pi. Let's say it's 3%. That's fairly moderate. We won't get into all the mechanics about the current environment and where inflation might go because no one really knows. But let's say it was 3%. So you subtract that 3% annual inflation rate and your real return, which means in your pocket after inflation, after taxes, after fees, was 0.56% per year or annualized, right? That's your annualized return. Over here, well, if it was 2.61, you got 3% inflation. That gives you negative 0.39% annualized return. So taxes make a big difference. The all-in costs of these investments make a difference. And guys, this is a reality, right? The tax changes they're having where anyone who does, if you do over $600 in revenue in sales on a platform, you're going to be issued a 1099-K. If those are long-term investments, you are going to have to theoretically pay your taxes. So all this to be said is, if it was as easy as, hey, it's going to be able to be sold for 150, you can buy it at 100, it has to go up. If it was that easy, everyone would be doing it. But when you take a look at the numbers and see that, gosh, this is a pretty meager annualized return I got here. What else could I have put that in? You have to start to understand the opportunity costs. No one wants to tell you the truth about these numbers. It's not, oh, I made 50% on my money, but over what time horizon, after what frictional costs? Collectibles is different than stocks and other markets in a lot of ways, in that there's a lot of frictional costs here, right? There's a lot of time, effort, and actual dollar frictional cost to move physical items like this. So investing in collectibles takes skill, knowledge, effort, and a lot of times a little bit of luck. And to be honest, guys, a lot of what I would say that they call the easy money, it's been made. All right, guys, the people who are going to make the most money going forward aren't going to be you buying a $100 box that actually costs you $110 that you sell for $150 that's really $131, and it was 5 years of basically dead money. It basically is a store of value. If it falls somewhere between here, you end up with a store of value, right? It kept up with inflation, right? So people will talk about collectibles as an inflation hedge, and that's where it really comes from, right? From 1900 to 2012, the last study they did, I think it was about a 2.5% return per year before taxes and fees of selling, right? So effectively, probably after those frictional costs, you ended up, better off than gold and treasury bonds, right? But guys, the people going forward, it's not going to be you buying, a couple boxes of, Battle Styles or Chilling Reign and holding it for 5 years. It's going to be the businesses who are constantly churning inventory, right? Because they just care about pure profit. If they can, instead of 100 or 110, they're buying this at 85 and they're selling it to you for 100. They're the ones who just made $15 per box in literally a week or 2 weeks, right? That's a business. That's profitability, right? Then you've got the grading companies and the middlemen who are going to make money off of that churn, the box breakers, people who make money off of the hobby itself and all of the transactions, your eBays, right? This 12.35% fee, those are the people who are really making money. Those businesses who are trying to elicit profit, right? So people will say, hey, anything has been profitable in Pokemon. Anything you could have bought, has made you money. Well, yeah, but what did that return really look like? And that was a different time, right? Those cost bases you could have bought in at instead of 110, really, really low cost bases 3-4 years ago, even 18 months ago, before everything exploded in the hobby, those days are gone. The landscape has changed, right? So I think it's really important that you guys know that a lot of that easy money was already made either by luck or people who saw the opportunity. Now, I mean, no one could have predicted the pandemic and the explosion of the hobby, but some people did see that these things were undervalued. But people telling you that, just hold it, it has to go up, everything is profitable. I want you guys to be wary of that, because this matters, right? Why does it matter? One, you got to understand the risk-reward trade-off. For a highly illiquid speculative item, was it worth getting 0.5% a year in return with all the risk you took on? Let's run this out, right? So if you bought it, let's use simple math, right? So if it was $100, right, and then it went down to 80 immediately, right? To get back up to that 100, that's a 25% return from there, right, guys? That's why your cost basis and your entry point means everything if you're looking at this in an investment, because in a highly volatile, speculative market, things like this, I mean, shoot, this could go down to $50. I mean, fast. And people don't like to take into account this downside risk. They just like to look at, hey, I bought it for 100 and I sold it for 150. Well, really, you bought it for 110. You sold it for 131, and we won't even talk about the taxes. But hey, you do you. So why does it matter? You gotta understand that risk reward trade-off. It could take a long time to dig out of an investment that goes south like this. You may never recover. You may never see that item appreciate, in real terms after inflation to get you back to made whole, much less make, money for it to go to that 150 mark. My goodness. So, second thing, don't be fooled, right? If it was this easy, guys, one, there wouldn't be all this math. We could just say, hey, 150 over 100, you made 50%, $50, you did great. If it was this easy, everyone would be doing it, okay? The guys who are making the money are the people telling you that this is a good investment, where they're buying it for $80 and they're immediately selling it to you for $100, and they just made 25% or $20, right? Those are the guys who can do that, and they can do that 10,000 times, who are really making the true money in this hobby right now. That's honestly an excellent business model, but you guys need to be careful knowing that, your buy and hold investment strategy that people are telling you to do, that's not the way that people are going to make the most money in this hobby, and it could honestly be an easy way to lose. And so thirdly, what I want you guys to understand is, this is a better way to keep track of your investments, or even just your collection, right? You guys know I use that investment term very loosely, but know your cost basis, track the things you buy. Say, hey, I bought this awesome card over here for $100, but really it cost me all in after taxes and shipping, 110. It's probably some random weird number, like $111.17, right? But keep track of that, because if a few years down the road, you want to sell that, well, you got to understand, did I really make money? Is it worth selling it now? Is it a good return? Where else am I going to put that money? And then conversely, understanding how this math works, where could you have put this money to garner some sort of more reasonable return for the amount of risk you're taking. People never think about that risk. The risk in this hobby is huge. Volatile, illiquid, inefficient markets create opportunities, but also create a lot of risk. So the past 12 to 18 months was a black swan event, guys. And understanding this entry point is the key to you being able to protect yourself from making a really, really bad decision. Because if you FOMO buy something that keeps falling like a knife, it's going to be almost impossible for you to make returns to even be made whole after inflation, not to say even to make some sort of profit on it, right? So the low entry points in this hobby are rare. You have to really focus on, these truly rare gem mint quality or low supply items that have tons of demand. If the demand is truly greater than the supply and it has a low or a high amount of quality to it, a high amount of demand, not many of it, those rare items, if you can get it at a decent entry point over time, can be a better place to appreciate. But these commonplace items, these booster boxes or modern product that could be printed into oblivion, that you've got not just you guys or the average collector saying, hey, I'm going to buy a couple of these boxes and throw it in my closet. Think about the wholesalers who have or the distributors who have pallets and pallets and pallets of this stuff that they might just hold on to throw onto the market in 2 or 3 years. So you got to understand all of those risks. You got to understand that, just because something might seem off the face like, hey, I made $50. Well, really, what did you make? And what did that return look like annualized over the time period you held the investment, right? So understand your cost basis, understand your time horizon, and just realize, guys, that, making money in this hobby is going to take time, effort, knowledge, and a lot of luck, and it comes with a lot of risk to it, right? So don't kid yourself, understand the truth, collect intelligently, know the risks, decide for yourself. I'm Connor from Rock Pokemon, and as always, collect what you love.